Hello, good evening, ladies and gentlemen, traders and investors. Okay, and of course, you guys are the seasonal vantage insiders over there. So I hope you guys already had your dinner already. So let me see the chat group first. Let me see the chat. Okay. All right. So can you guys hear me? If you can hear me loud and clear, please just say a hi to me in the chat. Okay. So you guys are, you are the members lah. Okay. So don't be shy lah. So just say a hi to me if you can see me. Oops. Attendees can check to everyone. Okay. Yeah. I put the settings ready. So can you hear me? Can see me? Can hear me? Everything clear? Hello. Good. Good. Okay. All right. So just quick housekeeping first, okay? So if you want to let people see your chat, right? So please set to everyone. Please set to everyone. So else, I think some of you guys by default it is sent to host and panelists lah, okay? So good evening to everyone. So how's the trade for the past few days? Not too bad, right? Okay, how many? I saw some of you guys actually posted the profits. Okay, I think quite a number of you guys, okay, traded, I think FANG, F-A-N-G. So personally, I traded both FANG and also the CDI. Okay, good, right? Not too bad, right? So when the opportunity comes, right, okay, so we must take advantage of that. Okay, and I can see some of you posted in the Telegram group, right? The TP level is about 1R. So if you can, okay, try to have your profit to be above 1R. All right. If you have above 1R, then once your reward to risk ratio higher than 1, okay, if you can lose half the time, you still can profitable. Okay. So like for example, like if your risk to reward is 1.2 to 1.5, then typically you can get a lot more. Okay. You can lose half, you can still be profitable. So we are waiting for a few more people to come in. Let me just share my screen right now. Wait, let me see. Just hold on for a while first. Okay. Just hold on. All right, you guys can see my chart over here, right? And also you are seeing my screen is the trading view chart, right? Yeah, actually, normally I'm the one hosting the event. So when I present myself using Zoom, not so familiar actually. Okay, no, because normally my Facebook Live, I'm using the StreamYard, so I'm very familiar with StreamYard. Okay, anyway, you guys can see, right? Can see my trading view chart. If yes, okay, can see, just type Y in the comments so that everything is good. All right, so first thing first, okay. So first thing first, right? I know that some of you guys here are using Yahoo and Hotmail. I realized that by right, if you subscribe to SVI, right? Your email will be linked to my email provider to send you the email. But a lot of times for Yahoo and Hotmail is quite difficult to send through, and a lot of times it's sent to spam folder. I think Gmail doesn't have this issue. All right. So if you are using Yahoo and Hotmail, please check your spam folder, and very important to mark as not spam. Okay, and also add alex@marketwiseasia.com into your contact list. And for the SVI members area, right, I'm using the membership provider PayHip. Okay, so please, when you check the email from PayHip, right, whatever the email that is sent through, okay, the email, right, add as contact list as well. Okay, can all right. So please, especially if you're using Yahoo and Hotmail, okay, can. So just going to do a very quick members area walkthrough very fast. Okay, so later I'll share with you once again a refresher on the setup and trigger, size and stop loss calculator, how to position size and all this, and the trade size and all this. Okay, and I'm going to share with you this my breadth 1 month, 3 month high low indicator. So this is something that I developed okay, something I developed, okay, and it should, okay, I think it'd be very useful for you. All right, so members area watch. I know there are some new members coming in. Any question regarding the members area that you're unsure, you want me to walk through with you or not? Okay, anything or not? Hey, by the way, right, so you can also ask your question in the Q&A tab. Let me see. Yeah, in the Q&A tab. Okay, ask the question there. Any question, ask there so that I can see. All right, so members area, so just to go through with you first, okay? So by right, the seasonal vantage report, I think once you log in, by default, it is this page, right? Okay, just click on the SV report, okay? Nothing new. Everything, the data sheet, it is all here. You can just download. I'm in the midst of preparing for the final quarter of the year. So I think by next week, okay, give me some time, it should be ready for you. So once again, I will put it in the download area over here. So once the third quarter has ended, then I will remove the third quarter data and put in only the fourth quarter data. So this is the members area. So if you want to go back to the members area, just head over to the dashboard here and then to the members, SV members area over there. Okay. So every single week, right? Okay, the usual Monday video, right? Okay, I will tag it as the weekly update. So every Monday, okay, I will send out a video. Typically, it is during the late afternoon, I will send out. So in the early morning, afternoon, I will see the current market, what are the futures doing and all this, right? Then I'll post the update there. So the tag here, it is weekly update. The open access, I used to post my public Facebook live stream and YouTube live stream, but nowadays I don't really post really lah. So I think I'm going to remove this tag soon. But anyway, you can just head over to MarketWise Asia Facebook and also YouTube to see the public live stream. Okay, and as I mentioned, right, the masterclass video, all the additional information, okay, other than the seasonal vantage stuff, is all inside over there. So especially if you are a new member, I encourage you, okay, watch through all the video or the content one by one, okay, especially, okay, the first one that I posted, okay, understanding the wash and rinse trigger, okay, and also setting up the cloud pivot points, central pivot range, etc. Okay, everything it is there. So I encourage you to take your time to walk through everything. So along the way, I will add more content. Okay, so yeah, and this is the OHPC stock. Okay, every month at the start of the month, okay, I will actually send you guys this OHPC. OHPC, okay, stands for 100% stock, okay, because, okay, if you actually look through your data over there, so this is, for example, the bullish stocks, right, you'll realize that the data I provided, okay, the winning percentage, it is at least 90% and above, which means that, okay, out of the past 10 years, at least 9 years, it has to be up. Okay, so this is to filter down the stocks, or else, okay, there will be too many stocks. So typically in a good month, for example, like March or April, where the stocks are usually very bullish, there will be a lot of stocks. If I don't filter out, if I added in the 80% or even 70%, then there'll be too many stocks for you already. So okay, these are 100% stocks. Okay, I will give you only the selected few. Okay, I do the data again. Okay, there are certain period it is 100%. Okay, so every single month that I will send this out. So this is just additional data for you guys to look through. But the main one, okay, the main one will be this main data. Okay, where it has a 90% win rate. So I think it is good enough for all of us. Okay, 90% chance is 90% win rate is already very good. So once again, it is under the dashboard, under the seasonal vantage report over there. Okay, so back to the members area over there. So if you are new to as in you're new to SVI, yeah, very used to saying MarketWise Asia. You're very new to SVI, right? Okay, by right, when you first purchase, right, you first make the payment, you'll receive the first email from me. So under this email, all the details, everything, how to use the platform, our members area setting every day, it is all there. So you want the refresher, okay, go to the over here, okay, the start here, and you can getting started with a SV training guide. So everything it is just there. And also not to mention that there is this two webinar. So ever since I started this members area, right? So I have done two webinars. So I also encourage you, okay, especially for those new members, right, to watch the watch the webinar over there. A lot of these the things inside are very evergreen. The content are evergreen, so it is very applicable till now. Especially, I think the number 2 webinar that I did, it contains the I talk about the elder force index with the ATR channel. Okay, I think I should make one masterclass video so that it's easier for you to refer back to. So, but especially for those new members, right? Okay, do watch these 2 webinars. Of course, right now today this is the 3rd webinar. All right. So other than that, I think the main things are all inside here. So remember, okay, all these are classified under the text. Everything okay? Clear so far? Everything okay? Just type okay in the comments. And I'm inside aircon room. Let me wear my jacket. Okay. Can okay. All right. So let me go through here and then okay, the setup and trigger. How many of you here, right, still aren't very sure, okay, the wash and rinse trigger and the setup I use? Every time I talk about the wash, every single Monday, you see, I put down the wash line, the trigger, when to enter, when is the price to enter into the stock or ETF, every single Monday, okay, you will hear my video, watch my video. So how many of you here, okay, still, okay, not really sure about the wash and rinse trigger, okay, and the setup that I'm using, okay, how to enter? If you are not sure, okay, just type me in the comments lah. Okay, Dave, Richard, wow, quite a number of you guys are. Okay, all right, can you explain it and would like to know about profit taking and stop loss as well? Okay, so I'm going to share with you this stop loss also. It is actually also inside the this master class. No worry, okay, this is where I'll be coming in to help you guys. All right, so the not this one, the setup and trigger. Okay, I will just use this. All right, so the usual stuff, seasonal. Okay, it is not the future, okay, but we can see the past. So at least we know what the past is about. So again, it is not the holy grail, okay, not a rule. We can't predict the future and does not guarantee. I always say that it is not a guarantee. It's not bao that what happened in the past will happen in the future again. But it does provide us a average, okay, the average viewpoint. What happened for the past 10 years over a period of time in history, that for the past 10 years, 15 years, 20 years, okay? All right, hi Henry, okay? Okay, so my setup, okay, so I typically I like my setup. There's a difference between setup and trigger. So my setup, it is actually a pullback. Later there'll be illustration. So a pullback basically is like a temporal reversal or pause in the market, in the price. So for example, the price just kept going up, right? So it's like a pullback, come down a little bit, correction, come down a little bit. That is a pullback, okay? So I prefer to buy opportunity in pullbacks, okay? All right, I don't really like to buy breakout. So I just want to do some illustration over there, okay? So this is a uptrend, right? Okay, pullback, it is over here. You guys can see my drawing, right? Can see, just type yes. All right, if you can see, just type yes. Okay, fantastic. Okay, all right. So today's session will be recorded. Yes, it will be recorded. So this I like to buy generally in an uptrend. Okay, so there's a pullback. So the thing that I don't like, okay, it is actually, okay, the breakout. So I don't like this kind of consolidation, okay, and then buy the breakout. This is called the breakout. So usually I don't like to do that. Okay, I like to buy a pullback. Pullback, it is over here. Pullback is over here. Or if suddenly price go up then come down lower, I like to buy at a low. I like to buy at a low. So all in all, either it is at a low, it can be still in a downtrend, okay, buy at a low, okay, or in a pullback uptrend, okay, buy at the steady pullback. Okay, so this is like this. Okay, generally, okay, all right, as a rule of thumb, most of the time it is buying a dip in an uptrend. So this is a pullback. Okay, so go up, price goes up, okay, come down and goes up again. So in hindsight, you know that it is heading higher, but this at that moment in time when price is coming down, that is a dip, that is a pullback, that is a correction. Okay, so these are the several terms that you can use it. Okay, all right. So now you know that price is actually coming down already. All right. So how do you know when to buy? So that is the trigger that I am looking at. So this is you want to buy something at a support area. So you want to buy when come at a support area. The support area can be the central pivot range, okay, the pivot point, the S1 support, S2 support, R1 becomes support, R2 becomes support, that kind of area. So typically I like to watch those areas as a support. So price somewhere around there, then you wanted to buy. So how do you actually buy it, or how do you actually go long? Okay, so my trigger, it is actually the wash and rinse. So for those who don't know, wash and rinse, okay, it is not so-called coin by me. Okay, I didn't develop it, or I didn't discover it. Okay, it is coined by Bini Ong. Okay, also one of our regular speaker at our so-called MarketWise Asia event. And actually, it is also on her website. And a lot of times when she does her free webinar or in-person talks, she also talk about the wash and rinse pattern or setup. So, all right, so it is not a secret. It's not a secret, okay? So it is publicly available, okay? But I find that it is actually pretty good, okay? So essentially, it is a fake move pattern. It's actually a fake move pattern. Okay, so you can see over there, okay, typically I think for buy, it is easier to understand. Okay, so I'll just show you. So every time I said that a price closed lower than the prior day low, price closed lower than the prior day low. So this is what I meant by that. Okay, so the prior candle doesn't matter, okay, but the next candle, like this black bar over there, okay, you can see that this is the closing price of ground. Okay, price closed lower than the prior day low. The prior day low, is it here? Can follow me? Can follow me? Okay, just type, okay. Yes, again, just type yes. Can follow me? Yes. This is the low. Can visually see, okay, the closing price here, it is lower than the prior day low. The prior day low here, it is the dotted line over there. Can see, all right. So, okay, once price reverse back up above the wash line, this is the day we'll be entering or a trigger into an entry or a position. This is just a 3 candle wash and it can be a few candles, okay, where price continue to stay here at the bottom, but it did not go lower. So for example, I give you an example over there. So okay, I try to draw this line. So this is like this is just now the example over here, right? So this is a candle a zone, okay. All right, so on this day I'm drawing, okay, price close lower than the prior day low. So this is the open, this is the high, this is the low, correct? No? This is the low, right? So price close lower than the prior day low over there. So previous example, the previous illustration is that next day price immediately reverse back up, correct? No? So this dotted line here, it is actually the wash line. Can follow, right? So after the next few days, right, price can maybe stay, here like that. It is not going anywhere, consolidate a few more price bar. So I just keep it short, okay? I didn't do the actual price bar. So this vertical line is actually the price bar. So it's only maybe until like this day 1, 2, 3, 4, 5th day, then price close above the wash line here. So this is where you want to enter on this day. Understand so far? Okay. If you understand what I'm trying to say, okay, just type letter U. Okay, can understand? So I repeat to this slide again. It can be a few days, it can be just immediately next day go higher. So the key thing is, okay, price must close lower than the previous day bar. Okay, the closing price, not the wick. The closing price must be lower than the previous low. The previous low can be the shadow or the wick. Okay, all right, then price reverse. This is the day you want to enter. All right, and then for the reverse, if you want to sell short, it is the reverse. Okay, you want to wait for the price, okay, the closing price to close higher than the prior day, the previous day high. Okay, so then that become the wash line. So you can see when, okay, price reverse back down and close below the wash line, okay, then this become the entry trigger that you want to enter. Okay, there are certain times, for example, right? Maybe when I do my Monday video, right? So maybe the price it is like this, okay, and then it become like this, okay. So at that point in time, I say that wait for the price to close above the wash line, then you enter. But the following day, within the next 2 days or so, price can continue to go lower. That once again, on this day, the new day here, price close lower than the previous day low already. So again, then the new wash line, it is over here. Okay, and subsequently, maybe another following day, there is no entry trigger, price continue to go lower. Okay, and once again, the closing price is lower than the previous day low. The previous day low is over there. So once again, continue to put in the wash line. So there'll be a new potential wash and risk line. So wait until once again, when price reverse back up, okay, close above the wash line, then this become your new trigger price to enter. Clear so far? The rinse bar must close above the wash line or the high of the wash bar. The rinse bar here, okay, the closing price must be above the wash line. Okay, the closing price must be above this wash line. Okay, I repeat, the closing price must be above the wash line. So I draw again, okay. So this is the example over there. Okay, I try to draw that. Okay, and then here, okay, the closing price is lower than the previous day low. Okay, so you want to trigger, let's say for example, just for illustration purpose, if the next day price close higher than the wash line, you'll be looking something like that, kind of. Okay. All right. So the closing, this is a negative bar, so I shaded there. Okay. So the next day here, the closing price, okay, closing price must be higher than the wash line. Can? All right. Yeah, so I use different color to illustrate. So yeah, this is the negative bar, okay? So after it close above one, what will be the trigger buy? Okay, so typically, okay, I watch the market. So for example, like, because the market open at 9:30 p.m., correct or not? All right. So by right, for the candle to close in the US market, right, it'll be 4:30. Sorry, is it 4? Yeah, 4 o'clock. Okay, 4 o'clock, 4 a.m. in the morning. At least for now, okay. 4 a.m. in the morning. 4 a.m. Yeah, in November will be 2 more months, then it'll be 10:30. So right now it is 9:30 p.m. By right, if the candle close, you want to wait for the candle to fully close, right? You need to wait until 4 a.m. So I'm old already, 老人家 cannot stay until 4 a.m. At most, I can stay until maybe 2, 3 p.m. That kind of thing, okay? But so typically, if you really want to enter, I won't wait until 4 a.m. So typically, okay, I say, okay, 9:30 p.m. start, okay, wait for at least 1 hour, okay, which means that, okay, after 1 hour, become 10:30 p.m., okay, all right, then you see whether price is above the wash line or not. If price it is still above the wash line, as a rule of thumb, okay, I will enter, I can still enter. But typically, I like to enter about 11 plus 12 a.m. that kind, or 12:30 a.m. that kind of period. So 1 or 2 hours after that, then I enter. Clear so far? Can understand? If you understand, okay, just type, once again, just type yes. Of course, there will be a chance where, after you enter at maybe say 10:30 p.m., after 10:30 p.m., okay, but towards the closing price, towards the closing at once the market close, okay, the candle become like that. Okay, the candle become like that. But initially it was going up like that, right? But after that, 4 a.m., okay, the candle like that. So price still did not close above the wash line. So this is the risk that you need to be aware of. This is the risk. There is a risk that, somehow the market is not so bullish. The market closed at 4 a.m., okay, then price closed below the wash line. So technically, okay, it is not triggered, but you have already entered already. So no choice, okay? No choice, you have to take the risk, okay? By right, you have already set a stop loss level already, okay? So that's the risk you have to take, okay? So let's say, for example, okay, you have already, okay, this is once again, so this is the negative bar over there. So I do a shader over there. So this is the wash line, okay? So let's say, for example, on this day, all right, okay, maybe tonight, let's say, for example, tonight, the candle, it is like this. Tonight, the candle, it is above the wash line, okay? So you missed it. You never enter at 10:30 p.m. or 11:30 p.m. or 12:30, no, sorry, you didn't enter at 11:30 p.m. or 10 or 12:30 p.m., whatever it is, okay? 1 hour after the 9:30 p.m. the market open, okay? So, okay, you can wait for the next day. So the next day when the market open, okay, you can immediately go and buy already. You want to set a limit order or market order, that's up to you, okay? That's up to you. But, okay, there's a risk that, the next day when you buy, okay, the market will have already gap up. The market will have already gap up. So the closing price is here, okay? It gap up here already. So you have to, take the risk. You will be entering at a higher price. You understand what I'm trying to say or not? So if you miss, okay, tonight, okay, there's a wash and rinse trigger. The next day, technically, okay, market open already, okay, you can go and buy. But bear in mind that, market could gap up, okay? Or there's alternative is that, okay, if you miss it, okay, next day, you set a limit order at yesterday close price. So a lot of times, okay, it can get a few one. Unless the market is really, really bullish, it gap up and you can't get filled. Then maybe you want to cancel that limit order and try to set a new limit order or a market order. Okay, I know a lot of people say, don't always set a limit order, But sometimes I do use a market order to buy. I'm desperate to buy. Okay, yeah, I'm desperate because I know that there's a trigger already. Okay, I don't want to go and queue for that little cents, a few cents, and then miss the whole run. Okay, you understand what I'm trying to say or not? Yeah, so it really depends on your comfort level. Okay, sometimes I use limit order, sometimes I use market order. Can you understand? Once again, can you understand? Okay, just type yes again. So a lot of why, a lot of why. Can you understand or not? Anybody need me to repeat this? The reverse is the same for the sell short one. So once again, as a rule of thumb, okay, 9:30, market open. Okay, generally, okay, wait for 1 hour. Let the market rest, do whatever shit you want to do. The volatility go up. Initially, the first 1 hour, typically there's a lot of volatility, okay? So 10:30 p.m., after 10:30 p.m. onwards, then you can enter into that trade, okay? But once again, when you enter on, like, for example, there's a wash and rinse today, okay? At the end of tonight, price can go down lower and it becomes, close below the wash line. So that is the risk you want to take, okay? Can the rinse bar rate gap up and open and close? Yes. Okay, so Clay is asking, can the rinse bar is rate gap up, open, and close above the wash line? Can. Okay, so another scenario, it is like this, okay? So this is the candle over there, okay? and then this is the red candle or the black candle. All right, and then this is the wash line where, I keep repeating, where the closing price is lower than the wash line. So the next day, okay, price gap up, open here, okay, and then close here, open, close here. So this is a negative candle. This is a red candle, but you can see that the price, okay, it is still above the wash line. So technically, okay, you still can enter. All right, I hope that clear your question. So we buy on the first day when it break above the wash line. Okay, I remember previously we enter next day after candle is confirmed. Yes, you can confirm, but typically I don't like to wait until. By right, you should wait on the day itself when price on the first day itself lah. But in the US market, you have to wait until 4 a.m. So I can't wait lah. So typically after the first 1 hour, I tend to initiate a new position already. Yeah, enter into the market. Can you understand what I'm trying to say? Yeah. Clear so far on this? This is clear on the wash line. Okay, wash and rinse. All right. So now talking about how to set your stop loss and your position size. Okay. All right. So I will go through the members area over there. So you go to the master class over here. Okay, you go down. Okay, there is this. Okay, how to set your stop loss and take profit level. All right, so this is the tool. Can you share example of case study? Yeah, there's a lot. Recently, there's a lot. Okay, I'll go through with you. Like recently, the energy stock, the FANG and the SVI and the Llama advertising. All these got wash and rinse. Okay, later I'll go through with you real case study. Okay, they'll be more familiar. All right, so head over to the members area over there. Okay, this is the link. Okay, trading view. This is published. Okay, all right. Public lah, okay, but people cannot find until they have the link. Okay, I repeat, this is a public link, but if you go to trading view, you can't find it unless you have the link. So you have to add to favorite. So of course, please don't share this too publicly. Okay, it is meant for you only. Okay, so head over here, click the link. Okay, this is the SVSLTP science calculator. Okay, so once you're over there, so I think there are quite a number of you added to favorite already. So you add to favorite. Okay, you add to favorite. Clear so far? Add to favorite. Okay. So let's say for example over there. Okay. Let's do the one that we have now. Okay. FANG. Okay, FANG. So this is the chart normally that I show you guys. So after that, okay, you just once you added to your favorite, okay, you can just type SVSLTP calculator. It'll be shown in your favorite. Okay. You just search SVSLTP, science calculator, it'll be there. Okay. All right. So let me just share with you the mechanics of how this indicator work over there. So the entry, stop loss, and size, it is already calculated for you. Later I'll go through, what does all this mean. But first of all, just want to share with you how this indicator work. Okay. So once you're inside, by default, it is like this. Okay. By default, okay, the entry price, okay, it is set to the last closing price of the candle. Can you see over there? The last closing price of the candle. So if you switch to SVI, for example, okay, the last candle is a very thin pin bar, the last closing price of the candle. So if you change to LAM, the Llama advertising. So memory, recently I only remember these stocks only. So okay, so yeah, so these are the one. Can you see that the closing price is here? So by default, the entry price, it is set over here. Okay, clear? So let's go back to FANG as an example, the Diamondback Energy over there. So by default, it is there. You can just either click on here, double click on the indicator, or click on any of the line over there. So you'll be brought to the settings. Okay, of course, it is enabled, you don't disable, so enable. Okay, if you check, okay, if you check it, it is by default is checked. So if you take it, you check it, is long. You uncheck it, okay, it is going short. So if you check it, you can see that, you know, entry price, then the stop loss is the pink color one. Okay, so if you actually want to reverse the role, you want to short it, you want to sell short, you then uncheck it. Okay, you can see that by default, your sell short at this price, your stop loss, it is over here. Then your TP, TP1, TP2 is there. Clear so far? Clear? If clear, just type letter C in the comments. All right, check, uncheck. Check is long, uncheck is go short. Okay? All right, so then by default, the entry price here, it is 0. This is some of the formula inside. So put it 0 by default, okay? The entry price, it is the last closing price, okay, by default. So let's say, for example, okay, you know, you want to set your own entry price. You want to set your own entry price, okay? So let's say, for example, previously, the last few days, right, when we first mentioned, it is on the Monday, right? So on Monday over, this is the vertical line. On Monday, this line over there, okay? Let's use the closing price as an example. So the closing price on Monday, this bar over there, okay, the closing price, it is 174.84. At the top, you can see what the price are. Okay, 174.81. So go back to the indicator, okay? So you can key in 174.81. Okay, then you change to the closing price here, the one that you wanted to enter, 174.81. Clear? So you can change to any price that you wish to put in. All right, if you don't want, then by default, it is 0. It is the last closing price of the last candle. Okay, so let's assume entry price is 174. Then the stop loss amount, how much you are willing to lose. Okay, it is not the value of the stock. Okay, like you buy 10K worth of Tesla or 20K worth of Microsoft stock. It is not. It's how much you are willing to lose when, okay, price hit your stop loss. So for example, you know, you can buy the stocks over there. Okay, then, you know, you buy already, you know, then price not in your favor, come down and hit this stop loss level. So when price hit this stop loss level, how much you want to lose? Okay, I'm only willing to lose $100, $500, $1,000, $2,000. I know a lot of here are high net worth. Like you all can lose $10,000 in one trade. Okay, I'm not so high net worth. Okay, so maybe I'm only willing to lose, say, let's say $500 in a trade. Okay. Maybe, you know, some of you here, Henry, for example, can lose $10,000. I put 10,000. Okay, I can only lose $1,000. Okay, let's put $500. Okay, I'm not willing to lose $500 in this trade. Okay, the stop loss size factor. Okay, because I know you, so that's I always use as example. Okay, all right. So $500, the size. Okay, the stop loss by default is 1.25. Okay, keep it as it is first. Okay, 1.25. Okay, the default is also 10. Okay, all right. At the bottom here, you know, don't do anything for now. Okay, I think good enough for you here. Okay, so it's click $500. Okay, $500. Here. Okay, so it's already position size for you already. Okay, which means that you can see that, you know, your entry price is 174. Your stop loss calculated for you, it is 167 based on the 1.25 ATR. Okay, which means that if price hit the 167 area over there, all right, and you're only willing to lose $500, okay, you can only buy 74.7 shares, or you can run out 75 or 74. I think it is fine okay. So typically 74 or 75 it is there. So which means that if you buy 75 shares of FANG, okay, somehow you enter over here, sway price don't go in your favor, but instead hit your stop loss, right? Okay, you will lose $500 plus minus okay. There's some slippage and such, but you lose $500. So which means, okay, you want to change this size. Okay, I'm willing to lose $1,000. Then you put $1,000. Okay, then your size will increase already over there. Can you see over there? The size increase. Now you can buy only 149.5 shares of bank, which means that either 149 or 150. Okay, clear so far? Clear so far or not? Okay. Clear? If clear, just type letter yes, Y in the comments. Very important, huh? I think this is quite simple to follow, right? Okay, so I also want to share with you guys, okay, later I'll go through the ATI and all this. Okay, so the trade size that I always mention to you. So every time I mention to you guys, what is your, reward to risk ratio. So typically, you want it to be at least, 1.5 or at least 1, okay? Preferred is 1.5R, which means, okay, all right, if your dollar risk, okay, if you're willing to lose $1,000, okay, you profit 1,005, okay? So this reward to risk ratio, this 1.5R, this $1,000 risk, this $1,000 risk, okay, is this one, okay? It is this one, the stop loss amount. So $1,000, if you are willing to lose 1,000, your reward to risk ratio 1.5, meaning that, okay, 1.5, you set your stop loss here, okay, you can see over there, 1R, 1.5. So which means that if you enter at 174, your by right the most favorable, okay, theoretically the best, it is actually 1.5. It is here, 184.034. That is the 1.5R already. You get what I'm saying? So this is here to here, it is 1R. Here to here, it is 1R. So here to here, it is 0.5R. So together here, this is 1.5R lah. So this is actually 1.5 times the length of this 1R distance over there lah. Can understand so far? So this is the 1.5R. So sometimes, you don't want to hold until 1.5R. You want to take profit at 1R. That is perfectly fine as well. I can see inside this, for example, this Telegram over there, the member success. You can see, for example, over here, like this is Chai Sing, take profit at 1R. Then Emily also take profit at 1R. But the best is that you can, try to have above 1R also, which means that you have some buffer. You can lose 50% of the time, okay, you are still profitable. Clear so far on that? Clear, right? So, okay, the formula, it is actually this, okay? All right, it is actually this. So, desired dollar risk is how much you are willing to lose. So, just now the example was actually $1,000, okay? Then the per share risk. So, let's say, for example, from here, okay, let's say, for example, the 174, okay, assume that this is 174 over there, okay? Let's assume that the stop loss here, okay, it is 170, okay? So your dollar risk is actually $4 because your entry is 174, your stop loss is 170, correct now? So it's 174 minus 170, it is $4, okay? $4. So which means that your per share risk is $4. Okay? So 2,000 divided by 4, that is 400 shares. So this is what the manual calculation is, and this is being calculated into here lah. So the number of shares you want to trade. Okay, so clear so far. So every time I say that reward to risk ratio, 1K, 1.5R, it is not the value of the shares. So for example, right, let's say for example you enter at 174. You enter at 174. Okay, what is the value of the share? Okay, so it's actually 174 times 149. What's the calculator? 174 price, right? Plus number of shares that you're buying here, 149. 174 times 149. So the value of the share, okay, it is actually 25,926. Okay, right? Okay, but you're only willing to lose 1,000. So this is the $1,000, 1K. Okay, and this is how much you are willing to buy lah. Okay, clear so far? So every time I say your reward to risk ratio is how much you are willing to lose if you are wrong and hit your stop loss. Okay, so the stop loss amount. So if you want to, you are new, you just trade very small only. You can also like, oh, I'm not willing to lose 100 块. Then okay lah, then just put there lor. You can see that the size automatically change for you. Now become instead of 149 become 14.9. Yeah, you dynamically change for you lah. Okay, clear so far? Can I move on? If I can move on, just type and move on. How you set 167 is automated. 167 stop loss is automated. Okay, that is I want to go through with you. So this is the settings over there. Okay, 1.25 ATR. Oh yeah, good question. Okay, as in thank you for asking this. Okay, let's say for example, I find that this stop loss is too tight for me already. I prefer a wider, stop loss. Maybe I'm afraid that price will come down over here, that kind of thing. All right. Okay, so which means that you want to have a wider stop loss, right? Okay, you can put instead of the size factor of the ATR, I will put, so for example, 1.5. Okay, can you see over there? It widens already. So now right now the stop loss is 165 already. So you still think, hey, I think that the stop loss is too tight, 太紧 very easy for the price to come down and hit my stop loss. I want to make it even wider. Maybe for example, you want to put 2. Okay, you see, you get wider. So instead of 167, now become 163. So your stop loss get wider. Of course, if your stop gets wider, okay, then your size also gets smaller. So, but the size, as in the loss, remain the same. So if you still set your stop loss at this level, but the amount is $100 only, price hit here, you still lose $100. Okay, but you can only buy 9.3 stocks. So you still think that this is too tight for you, go 3 lah, okay, you go for 3 lah. Okay, then become very wide, your stop loss become very wide. This is how you want to change some of the settings in the ATR settings over here. But by default, okay, it is 1.25 ATR. Clear so far? Can? Clear? Can? Okay, now it comes to this question. What do you mean by the ATR? Okay, so I'm going to share with you guys. Okay, so this ATR thing, okay, ATR, okay, stands for AVER, average true range. So typically, it is telling you the volatility in a day, which means, to put it simply, say, okay, let's say for example, if a stock is $10 right now, if a stock to $10, so typically it can move, okay, if the one ATR, let's say for example, one ATR is equal to $2, which means that typically it can move $2 in a day, $2 up or $2 down. So which means that if a stock, it is $10 and the ATR, based on calculation ATR, it is $2, which means that the volatility, okay, in a day can be typically price goes up to either, $12, or it can go down to $8 in a day. So which means that if today price market open at $10, because the average true range, the average volatility, it is $2. Either you can go up $2 to become $12 or go down to become $8. Clear so far? But it does not tells you the direction. So I do know the price can go up or go down. I just know that typically average, in a day, price can move $2 up or $2 down. Clear so far? Clear so far or not? Okay, clear? If clear on this, just type yes in the comments before I move on. Clear? Okay, I see 2 responses now. So I assume that the rest also clear. So which means that, all right, so if you set your entry price $10, you enter at $10, and you only set your stop loss at $9, okay, which means that you enter at $10, you put your stop loss at $9. So which means that it is just a $1 difference. Meaning that it is actually 找死的. You know what I mean? You just courting for death. You want broker to take away your money, okay? You want to give away free money because you already know based on the average true range, typically the price will move up in the day, $2 up or $2 down. So if $2 down means that price, there's a very likelihood can go to $8, okay? $8 over there. But you just put $9. So there's a 90% chance that within that day, price can hit that $9 level, okay? Hit your stop loss, and and you're out already. So that's the reason why typically you don't want to put your stop wider than the 1 ATR, So based on my number of years of trading, okay, I find that okay, when price really want to move in your favor, okay, if you are right, typically with the wash and rinse trigger, it should immediately within the next 1 or 2 days go in your favor already. It doesn't move in your favor, there's a very good chance you hit your stop. So I don't think you need to set your stop loss too wide. But so again, this is based on trial and error. So after a number of years of trading, I find that 1.25 ATR is just nice. You get what I'm trying to say? Right? Clear so far? Okay, so this is the so you are outside of the normal range. You are outside of the normal. So if I set it to 1, okay, 1. So this is based on the past 10 trading days, 10, okay. So which means that okay, for the past 10 trading days, okay, the volatility is like this. Can you see over there? This is like candle signs, the candle signs. Can you see over there? Like for the past 10 days, it's like that, cannot. It is something like that, average, average. Can you see? Average, candle signs like that. So if you put your stop loss, too tight, one just less than 1, there's a very high chance you get stopped out. So I like to put slightly away than the average. I just set it as 1.25. So it's tight, but I think good enough for me with a lot of times. So I have to enter, no. Okay, so it is already calculated for you. By default, it is 1.25. By default, it is 1.25. So for example, if you go to FANG over there, you go to CVI, okay, CVI also want to enter. So how come it's not showing over there? Right? By default, okay, it is 1.25. So the SL stop loss, it is already there already. It is already there. It is already there. Okay, you don't need to manually go and change unless you want to widen your stop, okay? Then you manually change to 1.5 or 2 times the ATR. Clear so far? Okay, this is very important. Okay, before I move on. Clear? Yes? Okay, can I? So I move on already. So this is how you use the indicator. I already mentioned to you guys already. So any questions so far? Any questions so far before I move into the last session? Can we apply wash and rinse and SL together? So can, okay. So let's do example over there. Like just now, VJ and also like William say any case study over there. Okay. So the most recent one is like LAMR. Okay, Lama advertising. So remember the video over there. I think last week, midweek, right? I see that Llama advertising is one stock that you can watch out for. Okay, it's in a nice uptrend, come down. Also the seasonal favorable period. Okay, and there is also a potential wash and rinse setup. So I do a naked chart, easier for you guys to see. Us too many lines over there. So I remove this. Okay. So prior to that, it is on Friday. Okay, on Friday it is like that. Right? Okay, it like that price close down lower, right? Okay, can see? So after that move like that, become like that, okay? After that, somebody drilling. Can you guys hear the noise or not? I hope you guys don't hear the noise. Okay, yeah, irritating. Okay, anyway, yeah, so you can see over there, this is the candle, okay, where price close lower than the prior day low. Can see? Can see or not? If can see, okay, just type, once again, just type yes. So this candle day low is 122.53. I put in 122.53. 122.53. Yeah, so it is here. Can see this candle dotted line is here. This is the candle where price closed lower than the prior day low. All right. And then the next day, follow me, candle bar by bar. Okay, follow me, candle bar by bar. On the next day, okay, the closing price did not close lower than the prior day low. The prior day low, it is here, correct or not? Prior day, so no trigger. Price is still didn't close above the 90. Oh, my daughter is calling me. Hi, Jenny. Okay, so you can see over there, yeah. Can see over there, price did not close higher than the wash line. Okay, so no trigger, but it's still valid. The wash line, it is still valid on this bar because this bar did not close lower than the prior day low. Okay, and then on Tuesday, also price is like in a tight range. On this bar, price also did not close lower than the prior day low. So once again, the wash line, this wash line still remains the same. All right, until on this bar, Wednesday, 11th September, initially price goes lower and then, okay, Wednesday here, okay, it closed above the wash line, So technically, by right on this day, Wednesday, okay, you should enter into the position already. Okay, you should enter into the position already. But when I first publish, okay, the stock in focus, okay, I also missed this. So I actually entered the next day. The next day, I actually also did not enter at the opening price or the when the market opens. I was a little bit busy lah, okay. So once again, I waited until about 10:30. I was a little busy. So my entry price was somewhere in the mid candle over there, not at the highest price. When I look at the stock, I said, okay, on this day, when I said by right, I should enter because price is above the wash line already. Okay, but I missed it. Okay, I missed it. So I entered the next day. Just now I mentioned, right? If you missed it, you can enter at the opening price or when the market open, you enter, okay, or after that, you decide whether you want to enter or not. So when I first enter, okay, it price go up a little bit, I think still okay lah. I think we are still early. So let's assume that, I entered at the 124.5. Okay, let's assume that I entered 125.5, okay, 124.5, let's assume, okay. Assume I entered 124.5, okay, so I put in the SVSLTP calculator over there, okay. Oops, how come it disappear again? In that SV. So on this bar, it is here. By default, it is always the current bar. Okay, so I go back in time. Okay, I put in the price to show you where I put my stop loss. Okay, 124.5. Okay, it is over here. Can you see the blue line? Okay, this blue line, it is actually like that. So I'm just illustration that when I first enter, it is at this price over there, 124.5. Okay. All right. So the stop loss auto calculated. See, 124.5. By default, it's 100. You need to change how much you are willing to lose. 100, 500, 1000, up to you. Okay. By default, it's 100. Okay. So let's assume that your stop loss amount is $100. By default, everything keep it to that. Okay. Then the stop loss by default, it is 121.25 lah. Okay. Then can you see after that? Okay. I say that I exited here. I exited here. right? Exited Llama with a 1.5R profit. So when also actually I entered at 126. I entered at 126. 126. So my exit level is 130.35. Okay, based on this indicator, you can see that 1.5R, it is over here. So automatically on this day, I exited already. You get what I'm trying to say? On this day, I exited this red candle over there. Clear so far or not? Can you understand? So this is how you use the indicator and the wash and rinse. So let's go back to the FANG example over there. Or CVI. CVI is neater. CVI is neater. Okay, CVI. Okay. So it was at a swing low. It was at a swing low, and because previously I said that oil, the sector is at a very low market breadth, and and favorable season, it is around that corner. Okay, and of course it is in the energy sector as well. So you can see over there when I first mentioned over there. Okay, I remove this line. Okay, can you see? Okay, can you see over there? 11 September is the day this swing low where price closed lower than the prior day low. So you can see over there. So the prior day low, it is this candle over there. It is 21.66. 21.66. See? So I said that on Friday, by right, it should have already triggered already. But mark right now, I say that only Monday, then I published the video. I say, hey, you can take a look at this stock if price continue to stay above the wash line. So technically, by right, open here. Okay. So you can see that drop down Thursday, Friday, it closed above the wash line. So by right, Friday can go in, but I did not enter. I only enter on Monday. So when I enter on Monday, okay, you can go back to my transaction record. Sometimes I share, sometimes I don't share, but somehow, just want to let you guys know that, I do really trade. I do really trade, okay? Not just say only. So CVI, my entry price, buy price, okay, buy price was 22.64. Okay, 22.64. 22.64. 22.64. Okay, it is here, mid candle over there. So I also did not buy at the first candle above the wash line. So I entered at 22.64. So if you add in the usual trade price 22.64, the SVSL calculator, okay? Yeah, can you see over there? This is where I entered. Then the stop loss calculator will actually put at this level over there. You realize that it is not at the swing low. It is not at the swing low. Okay, it is there. Okay. All right. Can see so far? Initial job claim coming in. Okay. The day before also closed lower. What do you mean by the day before also closed lower? $90.4 means number of shares lah. Number of shares you need to buy. So I entered at 22.64. Okay. If I'm only willing to lose 100 块, I'm only willing to lose $100, then I can only buy 90 shares of CVI. Okay. Okay. How about Lynette? How much do you normally risk per trade? When it hit your stop loss, how much you want to lose? Let me know a number. Then I key in here, just immediately show you. Using your example as an example lah. Okay. So when price hit your stop, let's say for example, I entered 22.64. Okay. When it hit your stop, how much do you normally want to lose? Okay. 500 块. Okay, $500. So put your stop loss fund lah, $500. Okay. Put there. All right. Which means that if you enter 22.64, the stop loss you put in 25.53, which means that you can only purchase, you can only buy, you can only long 452 shares of CVI. Okay. You can only buy 452 shares of CVI. So let's say price doesn't go in your favor. Okay, somehow you enter here and then price come down and hit your stop loss at 21.53. Okay, which means that you lose how much? 你自己放的嘛 right or not? You told me the answer, right? You lose $5 lah, plus minus lah, maybe minus some slippage or gap or what lah. Clear so far? Clear? And everyone else also clear? Clear? Okay, then I can continue already. So any other question regarding this SLTP calculator should be quite easy lah. Okay, maybe not so easy for you, but after a few tries, you should know, keep hearing me speak, you should know. Okay, the 10. Okay, the 10 September can over close. Yeah, correct, close over. But that's why okay, remember, yeah, remove here. You're right. Okay, you're right, William. You're right. Okay, so the candle keep going lower and lower. The candle keep lower. So on the 9th, price also go lower. So by right, your wash line, it is like that. Okay, like that here, ma. This is candle close lower than prior day. But again, continue here close lower. Then you put your wash line here again, because price this day close lower than the prior day low. And then continue move shift on this day, Wednesday, price close lower than the prior day low. So they move, you shift your stop, you shift your watch time until somehow that day, plus the seasonal calendar, we are in the favorable period, okay, and we are there and price close above the watch line, then we enter. Once again, I repeat, I did not enter on the first day of close, I entered on the second day of close. If somehow you manage to spot it yourself, whatever it is, by right, you can enter on the 13th of September. Typically, after 10:30 p.m., 11:30 p.m., 12:30 a.m., you can enter. So once again, I like to enter 1 hour after the market open, at least 1 hour after the market open. Okay. Sorry, where to click on TradingView to key in though, as you know where to put the indicator already, right? So I remember already, you click on this link over there. Okay. Okay, and then you add to favorite. You add to favorite already by right. Okay, by right, it should be inside your favorite list already. So once you're inside your trading view, right, you just search for the indicator. You just type SV lah, SV seasonal advantage. You should be able to find, by right, your favorite should be the star with the orange color. This one, you just click on it. Okay, by default, it is already up there. So you just double click on the indicator. So you can double click here, or can double click on the wash line on the lines over there, or you can go to the the indicator list over there and click on the settings over there. It is all will be there. So you can enable long short, enter your trade price by default at 0, your stop loss amount. The rest by default 1.25 you don't touch. Okay, you want to touch, you can change lah, but this is my settings that I prefer to do 1.25. You want to do 1.5, you can do that. You want to put 2 times, you can do that. Okay, can so in summary, after detecting a wash line, we need to wait for the greens bar, yes, before we decide to enter any trade. Yes, that's right, William, that's right. So I hope you are clear now. So if the price keep going lower and the price keep closing lower than the prior day low, then you keep moving down the wash line lah. But it should be together, we should be within the favorable period, okay? And then, there is a setup, price a pullback. There's also wash and rinse trigger, Can? All right, so I think clear so far. I think now it's about 8:40 already. I try to do it by 9 o'clock finish lah, okay? So right now, I want to share with you guys this new indicator that I developed. So is it applicable for all indices? Yes, okay. You can do it for indices as well. Yes, but again, it is entirely up to you. Because sometimes, the indices, during volatility period, you want to put your stop loss a little bit wider. Instead of 1.25, you can put 1.5. But, as a rule of thumb, you keep it default first. You keep it default first. After you are familiar with it, then you try to adjust the settings, whatever things you want, and see how it works. The lines, how it works. All right. The problem with some trade is that we get stop out, then the stop bounce. Yeah, so that is part and parcel, okay? Because you realize, okay, if you put your stop very, okay, let's say, for example, let's say, okay, I enter at 23, okay, I enter at $23, okay, $23, okay, 23, you get shift down with $23, okay, $23 really. Oh, okay, maybe, okay, I shift down here, okay, $22, okay, okay, easier to see, $22. Okay, let's say enter at $22, somewhere at the, just at the low of the swing high, so you'll put your stop loss here. So which means, okay, 1.1R, 1.5R, 2R, by yesterday, you can exit already. You get what I'm trying to say? If you put your stop loss wide, if you put your stop loss wide, for example, instead of, 1.25, you put, let's say, for example, 3R. Okay, 3R. Okay, because your stop loss is wide, okay, price have to move also a lot more to get 1.5R and get 2R as well. So you have to ask yourself realistically, okay, all right, a clean one swing like that, a clean one swing like that, a clean one swing like that, okay, are you able to get it or not? Okay, all right, so we've hit at the low over there. This is the low already. So at one clean swing like that, okay, go up before it have another pullback. Are you able to hit your take profit level or not? Okay, you get what I'm trying to say or not? Because if you put your stop very wide, price have to move a lot more to get 1 point, which means that, okay, you see over there, if you put your stop loss at 3 times the ATR, price have to move by yesterday, you still haven't take your profit, only just barely hit 1R, So which means that another 1.5 price need to go until 25 or $26 that. Do you think price can go higher or not? Can, maybe can, but it is a little bit overstretching already. You want the price really move in your favor. But if your stop loss is a little bit tighter, like what I said, I usually do 1.25, okay? It's a little bit tight, okay, which means that, okay, even you can hit 2R, you exited already. You get what I'm trying to say or not? Okay? Can understand? Yeah, so your stop loss wide, you have to, the price also have to move a lot wider to get the 1.5R. Because you are position sizing your stop loss and your take profit level. All right. And of course, it is as I say, right? That's why I say focus on the reward to risk ratio. It is part and parcel. If you are actively trading, you don't want to have your get stop out. Okay, then you invest. I think it's better. But as a rule of thumb, it is okay to get yourself stop up. It is fine. It happens to me also a lot of times. But if your risk to reward, it is 1.5R, you can lose 50% of the time, which means that if you take 10 trade, okay, you can lose 5 trade. You are still profitable. You take 20 trade, you lose half 10 trade, you are still profitable. Okay? Can? All right. Lena is asking, do we keep shifting the wash line down only when price keep closing lower than the prior day low? For the LAMR chart, there is no shifting of wash line. Yes, for the LMAR, there is, this is indicator, This is indicator, blur already, LAMR. How come I keep doing that? LAMR. Yeah, for the LAMR, there's only one wash line. So because these two candles did not close lower than the prior day low, so there's no shifting of the wash line lower and lower. Okay. Do you shift your stop loss as price is moving up? I tend to move SL as price move up. I'm a bit kiasu usually. Yes, there are a few ways that you can do it, but again, it doesn't mean that you have to copy mine, okay? So a lot of times, let's say, for example, if you enter, okay, I go back to CVI as an example over there. Okay, CVI example. So let's say you entered at $22, okay, at $22, okay, you entered $22. If you still want to hold on to it, you want to take TP at 1.5R or 2R, all right, you can actually, okay, once you enter $22 and price move in your favor and at 22 $3 already. So you are at 1R already. So you can move your stop loss, okay, to your entry price. Move your stop loss to entry, which means that 22 price move in favor 1R. So right now price is at this level already. So price is moving in your favor already. So you move your stop loss to your entry price. So instead of your stop loss at 20.89, you shift it to entry price at $22. So not right now your stop loss is at $22. It is your stop loss level there. So let's say price continue to go higher, okay, 1.5R, you can choose whether you want to take profit totally or you want to wait for it to go to 2R, up to you. It is really up to you. As much as I want to tell you a fixed rule what to do, because different people really have different personality, they are a bit kiasu, a bit kiasi, and to take profit fast, that kind of thing, then you take ahead. Or you want to go 1R, you take profit, okay, or you can show your stop loss, okay, 22. Typically, okay, typically I like to do when price at about 1R, then I shift my stop loss to my entry price. So at least I know, okay, once I shifted my stop loss to the entry price, okay, I know that I am confirmed 100% won't lose money. So let's say suddenly the price goes reverse back down and hit my stop loss, okay, at most break even, then plus minus the commission or the slippage. Okay, do you understand what I'm trying to say? Yeah. And typically, if you, let's say for example, okay, you enter 22, hit 1R already, you can also take partial profit. So for example, if you entered 90, okay, so based on the indicator, your stop loss is 100 块. No, as in your stop loss amount is $100. Okay, so you entered 90 shares. Okay, so let's say for example, you entered $22. Price goes in your favor and hit 1R already. Okay, you can choose to take partial profit. Okay, you exited half of your shares. So for example, initially you entered 90 shares, so you exited 45, you sell off half of your shares and you keep the remaining half, and then you shift your stop loss again to the entry price. So guaranteed you have some profit. Okay, but you need to realize that, okay, then your reward to risk ratio, it is not 1.5R already. Okay, can you understand what I'm trying to say? But so typically I don't take partial profit. I usually either take full profit or break even. Usually it's like this. Okay, usually it's like this. So there's a lot of permutation we can do, but personally, my personal style, it is entry price, hit 1R, okay, then I shift my stop loss to entry price. So guaranteed that you won't lose money already. Then I wait for price to hit 1.5R, that kind of thing. Then I exit fully. So I usually don't take partial profit. Yeah. Or like for example, yesterday, right, I mentioned that, I was looking at the price action, okay, the FANG, I think it will go up, don't go up, down. I say, okay, never mind, okay, I want to sleep better, I want to just take that profit, okay, so 1R, I fully exited. So for FANG yesterday, 1R, I actually fully exited. Yeah. Clear, understand so far, right? Usually recommend 2 to 3%. You are referring to the per trade, right? Yes. So for example, your account size, it is $10,000. Okay, of course, I know here a lot of people have $100,000 or $1 million. Okay, so just a illustration purpose, let's say, for example, your account size is $10,000. Okay, 10% is 1K correct. 1% is $100 1% is $100. So usually I recommend 2 to 3%. Okay, as risk, which means that if your account size is $10,000, okay, 2 to 3%, let's say for example 2% risk, it is $200. This is the amount you are willing to lose. So which means that this is where you put here your $200 over there. Clear so far? So if you want to risk, okay, if you want to risk, okay, 5%, where's the pen? Sorry. If you want to risk 5%, okay, I think max 5% now, okay? So 2 to 5% now, okay? 2 to 5%, okay? 5%, which means that from a $10,000 account size, 5% it is $500 risk, which means that this is where you want to risk only $500 per trade to position size. Then you put that on $500, okay? The reason why I recommend, 2 to 5% or not like one trade where you dump, just put 10%, 20%, that kind of thing. You need to understand that we are actively trading. We are not investing. Okay? Actively trading, that there's a high chance that you can get stop up and all this. So imagine you every trade you risk 5%. Okay, typically I think a lot of times you hold a few positions. Let's say if you hold 5 positions at one time, okay, somehow the market just go against you. Every trade 5%, you have five positions. 5 times 5, okay, it is already 25% drawdown, which means if your account size it is $10,000, the capital is $10,000. 25% drawdown means your account only left $7,500 there. You get what I'm trying to say? Yeah, so try not to go above 5%, okay? Because typically we hold a few positions, like 3 positions, 5 positions. So let's say for example, you hold, let's say just you trade, you risk 5%, okay? 5%. You have 3 positions. So if all 3 are losses, which means that you already lose 15% of your capital already. Okay? You get what I'm trying to say? All right. Clear so far or not? Clear? If clear, just type letter C. Okay? After taking profit VJ, will you enter opposite direction? No. No. Okay, I'm happy with the profit. Wait for the next opportunity to go long again. Most of the time is going long. Okay, I know we can go long and go short, but try not to overly so-called confident and go short, because you can see that over the long run, okay, weekly time frame, okay, the S&P are generally going up. So don't try to go against the trend. You can see that for the past few times I tried to short it, okay, it doesn't really go really that well as well. So that's the reason why I say your reward to risk ratio is very important. If you can get above 1R, okay, or 1.2R, you can get 1.2R and above, you can lose 50% of the time. You lose half of your trade, you still can be profitable. Okay? How do you scan the trade weekly opportunity from the SVI? So I have to look at it manually, and I also use this. I think I mentioned a few times before. I think many times market in out as a screener, okay, to screen for some of the stocks using wash and rinse, using like price above 150 days MA to have a general gauge that is above the uptrend, price is above 8 EMA, that kind of thing. Simple filter to fish out what is the stocks that has already a wash and rinse trigger. Okay, can I'm gonna go through. Okay, any question first? Later you ask me again. Okay, I'm gonna go through this breadth indicator. So I think pretty important also. Okay, let me go through this. Okay, so no question on this SLTP first. Can have question, but later lah. Okay, okay. For those who are waiting to leave one, maybe I share with you guys so they can leave earlier, that kind of thing. Okay, all right. So I have this breadth 1 month and 3 month high low indicator. Okay, so I just want to tell you, this indicator, it is not like totally out of the blue new indicator, or I developed 100% unique indicator. It is no, this high-low indicator, it is pretty common. Okay, it is just that, okay, how do you make sense of this data? So I first share with you how I get this data first. All right, so if you go to the barchart.com over there, okay, barchart.com, okay, you don't have to create an account or whatever it is. Okay, you can just, okay, go to stocks, okay, and then go to market performance. Okay, I think that's what I mentioned about this one, right? The percentage of stock above the MA. It's not this one, sorry. This is the graph, okay, the usual graph, okay. It is sorry, it is going to the bar chart stocks under the new high and low. New high and low. I repeat, new high and low over there. New high and low over there. Okay. So you can see that over there, there is this, you scroll down under the tab here, high, low, and then summary. I think it's a summary. Aha, it's over there. Okay. You can see that it shows you the 1 month high, 1 month low, you know, and all this data lah, okay? And then you can see that the end of day historical data, all right, 1 month high, 1 month low, 3 month high, 3 month low, based on the overall stock market, NYSE, the NYSE, New York Stock Exchange, NASDAQ, and over there lah. So if you actually click on that, okay, for example, the NYSE, okay, the 1 month high, M1HN, it will show you this over there, okay. All right, then you go to the chart and all this. It is not very intuitive lah. It's very hard. You don't understand. All these are just numbers to you lah. You won't know how to appreciate all this data over there lah. So another way you can do is that, for example, you remember this sticker M1HN. Okay, M1HN. Okay, just to make sure that you are still with me, can you just type M1 over there? You understand what I'm trying to say, right? M1, M1HN, okay. This ticker symbol, it is inside trading view, M1HN. So if you go to this, go to ticker M1HN, okay, it is there, okay, the 1 month high of the NYSE. Short form, NYSE stands for New York Stock Exchange lah. Okay, it is all there. So all this ticker from bar chart, okay, I go back here. Okay, all this sticker with the dollar sign over there, it is all inside bar chart. Okay, so you can go to the stickers here. Okay, you click on the plus. I think I shared this last week, right? For the market breadth one. Okay, so key M1HN. Okay, 1 month high. Then you click on the new pane. Then the data makes more sense to you here now. Okay. So this is the 1 month high. So how many? So you can see that NYSE, there are a lot of stocks. So NYSE, there's a lot of stocks. You can see that, this is the maybe about 1,000 plus or stock, that kind of thing. The high is at 1,000 plus stocks. Okay. So this is the data that it is trying to show you how many stocks are having new 1 month high and how many stocks are having a new 1 month low. Okay. For example, NYSE, how many stocks are having 1 month high? How many stocks are having 1 month low? 3 months high, 3 months low. Within the within these 3 months, how many stocks are having a new 3 months high? How many stocks are having a new 3 month low? Logically, can understand, right? Can understand, just type OK. Can For the past 1 month, how many stocks are making new high in NYSE? For the past 1 month, how many stocks are making new low in NYSE? Clear? Clear? So I don't assume that everybody knows. Only William is clear, the rest not clear. Okay, I think you're clear. Okay, I think I keep repeating already. Okay, so once again, there are a lot of data over there. 1 month, 6 months, 3 months. Are you high, low, close? Are you NASDAQ? Are you NYSE, ETF? You are over the counter. Okay, I think it is not very useful. Okay, I think it's not very useful. So I realized that, okay, of course, the 52-week high, 52-week low also quite a lot of people use. But I realized that, okay, actually the 1 month and the 3 months is really not too bad. It is really not too bad, okay? All right. There's no RTY, okay? I think NYSE is good enough, okay? As a general whole of the market. You are not trying to catch individual stocks or the small cap. You are trying to see when the market will turn. Typically, when the market will turn, the rest of the indices will turn as well, okay? So, yeah, it is fine. It is to try to catch a bottom or at a high there over there. So NYSE is there. All right, so you go to here. Oops. So I have this indicator. I develop it, okay? So you know how I develop it. So I develop it, I created a new indicator, okay? So you can head over to the link here. All right. Okay, I post it in the chat, okay? Or I post in the link. So I will add this webinar into the members area. So at the members area, the posting there in this video replay, you should be able to find this link as well. So don't worry, okay, if you cannot find it, but this is a bit.ly link. So if you really want to do it manually, okay, you can also do it yourself, okay? zoom in a little bit bigger. So it's bit.ly/SVI-9C-NYSE-high low lah. Okay, but I will also post the link in the recording the post over there. You should be able to find the link. So this is the 9C 1 month, 3 month low. So just add to favorite. Okay, you just add to favorite. Can? Okay, add to favorite. Just add to favorite. Clear so far? Add to favorite. Well, so far got 16 already. Okay, add to favorite. Okay, so you add to favorite already. I remove the rest of the thing first. Okay, so technically, okay, I'm using NYSE. So technically, you should be looking at the apple-to-apple comparison. You should look at the 9C composite index, the New York composite index. Okay, but I think if you use SPX, I think it's fine as well. So you go back to the indicator list. Okay, you search NYSE 9C, you should be able to find. Okay, 9C. You can see the white LXU 9C. Okay, all right. Click on 9C. Then you can see it is all there already. So I do it in a bar chart or histogram chart to be more precise. It's a histogram chart or a bar chart. Okay, so it's all there. So you double click on the indicator here, or you can go to the indicator here. Oops. All right, indicator here at the settings over there. Okay, or the indicator here, it's the settings over there. You can change this. So here, right, the indicator, there is this, okay, 1 month low, 1 month high, 1 month high minus low. See, I think can understand, okay? Number of high minus number of low within the past 1 month, okay, and 3 month low, 3 month high, 3 month high minus low. Okay. All right. So can see over there. Okay, I'll give you a good example over there. Let me try to find. This is the weekly time. Sorry, go back to the daily time frame. So it should be in the daily time frame because it is a 1 month high or low. So your time frame, okay, your time frame looking at this should be around 1 month plus or minus. There about 1 month plus or high. Okay. So I want to share with you guys. It is okay like this. Sometimes catch a low. Right. So this is the 1 month low. I repeat, 1 month low of 9C. 1 month low of 9C. Okay. Can you see over there? Okay. In this is in 2023. 2023. Okay. Can you see that the market is generally in a correction? Okay. All right. So you can see that from here, this low over there, okay, this is the low. So there's a quite number of stocks making a new low. Then new low over there, the index S&P is making a new low. Can you see that the 1 month low is making also a new high? So which means there are more stocks during this 1 month making a new low. Can you see? Yeah. So it's indeed very bearish. Can you understand so far? Can you understand? Just type yes. So if price keep going lower, you should expect to see more stocks making new low. So in this time frame, this is 1 month low. Can I repeat? As the indices keep making a new low, logically, okay, there will be more stocks making a 1 month low. Clear? And then you see over there, all right. And then on October, the index is making another new low. It's making another new low. Okay. But you see over there, okay, it is not exactly divergence. It is not, but I can see that, it is making a lower low already. So there are lesser stock making a new low now. Can you understand what I'm trying to say? Price goes down lower. So if price go down lower, technically, okay, there are more stocks making new low, but it is not showing that. Okay, the 1 month low is in fact lesser now. The 1 month low is lesser now. So, this is the so-called, in a way, you can say that this is a divergence, but even though it is not the case, okay, making a new low, but the 1 month low is not making a new low anymore. So you can see that, hey, potentially, it is not 100% guaranteed. It is not 100% guaranteed the market will turn up, but at least it tells you that, hey, maybe I shouldn't be so bearish right now. You get what I'm trying to say? I show you a few more examples. It is best if price can make a lower low. Like for example, over there. Okay, so in 2022, okay, this is the bear market low. This is the bear market low over there. Okay, you can see that over there. Okay, at this point in time, market is making a low. So you can see that this is the 1 month low. So okay, yeah, there are more stocks making new low now. That make another leg down. Oh yeah, there are a lot more stocks making a new low now. Clear? A lot more stocks making new low. Okay, so market is really bearish. Then price go out a little bit, then come back down. Oh, price is making another new low. Price is making another new low. But you see that, hey, the 1 month low is actually lesser now, which means that even though the indices is making a new low, but the number of stocks in the whole New York Stock Exchange is making a lesser new low, which means that beneath the surface, a lot more stocks are starting to go higher already. It's not making new low already. So once again, you can see that there is a, it's showing some divergence in a way lah. Okay, this is like clear so far? Yes or not? Yes or no? In a way, it's like a momentum indicator, but it is not exactly momentum. It's just calculating how many absolute number of stocks making new low. Yeah. Or like rate of change, it's also can, rate of change, yes. Okay, can. So this is like that. So another way it is like, so, okay, okay. Okay, so over there, like for example, this is 2022, January, okay? Okay, so you can keep making new low. This is very, very bearish. Market is very bearish, okay? And then making new low. Is it going to reverse? So might not be 100%, okay? And then making almost the same low again, but it is not making a new low. So keep going down. Okay, so after that, market do actually reverse. Of course, you need to wait for the price action, the market sentiment, and other market breadth. This is not just a standalone tool. You have to combine with whatever other things you know to make an educated guess. You get what I'm trying to say? So once again, you might say, hey, Alex, like the histogram a bit difficult to see there. Oh, no worries, okay? You can actually add in a moving average to smoothen out the histogram. So by default, the MA length is 5 moving averages. So you can show moving average. Then you just click OK. Then the red lines will be there already. So for example, like what I mentioned over there, right? Okay, see the high to high. So you can see over there, the high to high. The high to high, this is a red line. You can see that this is the peak, okay, the peak and then the peak over there. So making a lower low already. Okay. So again, this is for the 1 month low, okay? If you really want to see like the true divergence case, right, then you can use the 1 month high minus low. This is the change, the number of high minus away the number of lows, okay? This is like the delta, okay, the change. Okay, you click on that, so it will show like that, it will show like that. So this is where like a true divergence you will see. So which means that, if this number keep going negative, which means that there are a lot more stocks lower compared to number of highs. Okay, so if keep going higher means that there are more and more stocks going higher. So this is the 1 month high minus low. So you can see over there, okay, this one, while it is actually making a new low, okay, this high minus low, it is actually making a higher low already. So this is indeed a true reversal. This is a true reversal. Not true reversal, true divergence. Sorry, this is really a true divergence. So like just now I show example over there, like here, okay? See over there, not this one. I think, yeah, somewhere around here, okay? Example on here, okay? So you can see that making a low, okay? This is a lower low, but it's making a higher low. So this is a divergence already, okay? And there's also the high, okay? But high, I find that it is not so easy to catch a top because a lot of time, price can continue to go higher, a lot higher than we can expect it to be. So, not so great in terms of, can see that not so great in terms of catching the top, okay? It is pretty good in catching the bottom. It is pretty good in catching the bottom, okay? But I still add in, if you want to, explore yourself and find the 1 month high, you can also do that. But I find that typically it is better in catching the low. So the 1 month low and 1 month high minus low, it is a better clue for a market low compared to when the market is in uptrend, you want to catch the downtrend. Okay, clear so far? Clear so far or not? So again, you can use the this is 1 month high low. So if you want to look at the 3 month low, you also can do that. Okay, 3 month low high. So your time frame should be about 3 month low. So about almost the same, almost the same. You can see over there. Okay, but you will show almost the same thing. So you can see that going down, it is also showing a divergence as well, that kind of thing. Okay, I hope here over there, like somewhere here. Yeah, you can see over there. 3 months, within like a 3 months period. Okay, 3 months period. Okay, it is going high. This is a very bearish, and then price make a lower low. Okay, clear so far? Only used for index and no, this is for index. So you need to know what is this about. This is a New York stock. Actually, it encompasses all the stocks. So you cannot use for individual stocks for now. This is more for catching the individual, catching for indices. Okay, so you can use S&P 500 or you can use the NY80 New York Composite Index as a proxy to catch a market. Again, I'm tell you this is not solely just use this to catch a market low. You need to encompass with other indicator, market breadth, other market breadth, price action, sentiment, other things. Can you get what I'm trying to say? Okay, are you able to catch the bottom of any fundamentally good? As of now, this is a market breadth stock. This is a market breadth. It catch the whole indices as a whole. This is not for individual stocks. This is a market breadth tool. I repeat, this is a market breadth tool. Okay. So when the market bottom, okay, let's say for indices bottom, okay, there's a very good chance that the big cap will go higher. Then go and individually go and find whatever Nvidia, Microsoft, or Apple stocks you want to go and catch it. You catch yourself. So you need to understand what the indicator is about. Then you know how to fish out for individual stock. You need to top-down approach. You know that it is a market low already. Once the market is able to find a low, the rest of the stocks, okay, most probably will go higher as well. A rising tide will lift all the boats. Okay? Clear so far? Is this a good tool? I think it's a good tool or not? If you think this is good, just type good in the comments. So I will not share this publicly to other people. So right now only for SVI, only for you guys. Okay. So this is the link over there. Okay, I post it in the comments, and yeah, so once over there, all right, you add to favorite. Then you add to favorite already. Then you search for the NYSE 90. You should be able to see this indicator. So once over there, you play around lah. Okay, indicator type 1 month low, 1 month high, 1 month high minus low. Then you want to show moving average or whatever it is. You want to change your smoothing numbers. You also can change, but by default it's 5 lah. Okay. Can please post the link for the SVSL stop loss. SVSL stop loss, it is over there. So, okay, so for this also, please don't share it with people. Please don't share with people for the SLTP stop loss. For this indicator also, it is public, but people cannot search unless you have the link, okay? Unless you have ordered in your link. All your videos are available. No, it is unlisted. People cannot find the video unless you go and share it lah. Then people can watch the video lah. So it really depends on you whether you want to share it to people or not. But other than that, it is unlisted video. By right, technically, if you guys don't share it, people won't know. But if you want to share with people, I cannot stop you lah. At the end of the day, I put in any other Vimeo lah, whatever it is. If you really want to share, there's a way for people to share it lah. Okay. All right. So yeah. So technically, it is all these are closed group. Okay. The problem is I don't mind sharing to other people. At the end of the day, is whether you have the confidence to trade or not. Okay. Like previously, right? I give you guys the data only. Okay. Let's say I give the data lah. Okay. Do you guys know how to do it or not. So people getting the data, it is not that important. Important is I think I add value by providing you guys, the market outlook, the sentiment that I feel it is, the market breadth plus the watch list that the watch list that I'm looking out there. What do you mean by without sharing anyone it is? What do you mean by without sharing anyone it is there? So you go to YouTube, you cannot find the video one. Yeah, you cannot find the video one. Okay? Yeah. So this one, if people want to use it lah. Okay, this is not that important. It's free. Okay, I hope that you all don't share. If you really want to share, I cannot stop you also lah. Okay, yeah, but I hope you guys don't share lah. But I don't want to make it very close, need to make it close, then give you access, very 麻烦 lah. Okay, it is okay lah. At the end of the day, if you are so good, then you try to make profit from the market lor, using this tool lah. So if you can make it, then it is yours lah. I let you make profit lor. That is what I'm trying to portray lah. Okay. Try not to share. If you could, keep it within yourself. Okay? Keep it within yourself. Too late to enter, Fang. Too late already, lah, Lynette. Too late already. Okay. When I first mentioned, okay, above the watch line, you should be entering already. Okay. Yeah. Okay. Yeah. So right now, Fang, it is there. Too late already, lah. Okay. Yeah, a bit too late already. I won't chase, lah. I won't chase. Okay. I won't chase. Corn, good question. Corn, I actually enter into corn. I enter into corn. Okay. So this, by the way, this is only applicable the 9C index. So it will not be applicable to the corn. So you can remove this. Okay. So I actually enter into corn. Okay, this is a discretionary trade. This is a discretionary trade. Okay. All right. It is not based on wash and rinse. Okay. Again, you can see that if you really want to use a wash and rinse, it is here. You can see over there. This is the price where price close lower than the prior day low here. So somewhere around there. Okay, somewhere around there. Okay, somewhere around there. Okay, so after that, go up a little bit and pull back. Okay, so based on what I see, I think there's still potential. So I actually enter in corn. So this is a discretionary trade. So corn ETF is corn, CORN. Okay. Is it applicable to NASDAQ? Technically, there is NASDAQ. Okay, technically there is NASDAQ over there. Just that I didn't do it. I find that 9C it is good enough already. I can develop it, do it, but I need some time now. Okay. Yeah. So right now it's also 9C. I think 9C is good enough for now. Okay. Once 9C move, a lot of stocks, okay, typically the rest of the market will move also. Yeah. So it is a very good tool to catch the bottom. Okay, any other question? Wow, nice something really. I initially wanted to only do 1 hour, but more than 1 hour already. Any other question? Okay, so today I cover a few things over there. Okay, so I cover, if you're using email, Yahoo, Hotmail, please check your spam folder, mark as not spam, put my email address, and also from the Payhip email, I'm using Payhip as the membership provider into your contact list as well. I walk through the members area, the setup, okay, the pullback and the trigger, the wash and rinse trigger, the size and SL calculator, you should know right now. I explained that and also share with you the this just now the one that I showed you, the 1 month and 3 month high low indicator. Yes, I enter into corn, CORN. Yes, the ticker symbol it is CORN, corn. Okay. This replay video will be on SVI. Yes, this replay video will be also on SVI members area. So if this replay video, I will also, okay, so under the members area. So by maybe tomorrow or the day after, you'll be the first post here really. So you take over this post, then you'll be classified tag under webinar. You'll be under webinar. So next time you will find you'll be under webinar. Yes, there will be a recording, it will be posted into the SV members area. Okay. Corn ETF still can enter. This sort of question are very hard to answer that. Okay. I think still can now. Okay, I think still can. But again, you must put your stop loss now. Okay. Every time you enter into a trade, you must always put your stop loss level. Okay. Hit your stop loss, you get out. Okay. So this is a discretionary trade. Let's say, for example, if you put in your SV stop loss calculator. Oops, not this one. So you put in your SVI calculator, okay? All right. So by default, let's say you enter today, okay? Yesterday closing price is 414.75 lah, okay? Which means that, based on the 1.25 ATR, okay, it is at oh, this is capital. No, sorry. This is not the con. This is the put properly. So it's the Fulcrum Con Fund ETV. Okay, yeah. So this is, assume your entry price is based on yesterday closing price. Okay, your stop loss level will be 17.82 lah, 1.25 ATR lah. Okay, if you think that it is too tight for you, okay, you can feel free to adjust it yourself lah. Okay, you can put it to or put it wider, or you want to put it below the swing low, that kind of thing. Then you want to put it like 3, whatever it is. Okay, you want to put it like that also can. Okay, so I cannot tell you where to put. Okay. By default is 1.25, but again, if you feel it too tight for you, feel free to adjust. Okay, you don't have to copy me one. So you guys have to remember, the main thing that I'm providing you guys are actually the data sheet. Okay, all the rest of the thing that I share with you guys are value added service. Okay, you guys remember, the main thing I'm providing is the data sheet. You are buying the data sheet. Every other thing it is additional bonus value other service. Okay, so again, I share with you my way of doing. 1.25 is 1.25. If you think that you think that it's too tight, want to put it wider, it is up to you. You really can explore yourself at the end of the day, because trading is already all about yourself. You cannot copy me one. Okay, you feel that 1.25 too tight, then you put 1.5 lor. You can do that. Okay, can any other question? Today futures corn is down. Yes, that's right. Corn futures, it is down. Okay, ZXC today is down a little bit. Okay, it is down a little bit. All right, so any other question? Last question. So those who need to leave, you can leave now. Those who still have question, I'm here to answer your question. Okay, so if I have nothing else to cover, so those want to zao, can run. Okay, but if you have question, I'm here to answer a few more questions. BTC, why not? Do you think Tao Now Pai to buy now? Hey, actually, Tao buy now quite pretty good, right? That time I said that I think that there's some accumulation. Okay, and today, after that, when I first mentioned, okay, Bitcoin just ready up already. I think can buy based on position holding. I think can buy. I haven't entered yet, okay. I might not enter also, okay. Yeah, too many things to share, okay. All right, so yeah, I think not too bad, not too bad. I think if your holding period is maybe 3 months and above, I think it's quite okay. Yeah. Yesterday, do you remember right now yesterday? Is it yesterday or the day before? I said that you ask me, you tell me that hey, price is coming down, that kind of thing, right? You can see price zun hit the CPR and then price rebounded. Okay. How often you look at the yearly CPR? How often? In fact, quite often. Actually, this is not my default chart. My default chart. My default chart, it looks like this. Because it might be too complicated for you guys. So I simplify it. So those who are here, I just share with you guys over there. My default chart, it is actually look like this. I remove all the line first. So my default chart actually has the yearly CPR over there. It is always there. It is always there. Okay, so when price hit the yearly CPR, it will be there already. So okay, additional things to share. I think hopefully by 9:30 I will just cut off the webinar. Okay, all right. So this is a 2-day time frame cloud. This is a 2-day time frame cloud. So okay, if you go back to the normal indicator, the cloud plus CPR, right? This is the daily time frame. So actually, if you change to 2-day time frame, it is the same like that. Okay. because I know that there are people not using the paid trading view subscription. So I never use the 2-day when I show the chart because, only if you are paid trading view user, then you can customize your time frame. So this is a 2-day. And because, okay, trading view, the time frame, right? If you change to 2-day, your candle will also be 2-day. Okay. Yeah. So you change to 1-day, your candle will also be 1-day. So this one that I'm using, okay, this one that I'm using, where is it? Okay. It is showing a 2-day cloud, but the candle is actually 1-day. Is it confusing for you guys? So it's a 2-day cloud, but it is a 1-day candle. So I actually use this indicator. Okay, it is free from TradingView. So just go to the indicator bar, search for MTF Ichimoku cloud. MTF stand for multiple time frame Ichimoku cloud. Okay, so I just remove that. So I just show you how does it work. This is the normal chart that this default Ichimoku cloud. So if I add in the multiple time frame Ichimoku cloud, it'll be like that. So by default, nothing. Okay, so you head over to the settings. Okay, you put in the base parameter. Okay, the first Ichimoku here. All right, you put 2-day. Once again, you need to be a paid user, then you can see 2-day. Okay, 2-day. Then the Tenkan, Kijun, Chigao, Kumo, not Kumo, Chigao remove. Now click on this also. Click on this first Ichimoku. Then you'll see that it is here. Okay, so if you click by default the time frame for Bitcoin here, you change to the 2-day, you can see it is the same. You can see that it is the same. Now it becomes the 2-day, original is like that, right? Daily is like that. This was the one, then it becomes like that, 2-day. So it is exactly the same. So this is the 2-day that I'm using, but the candle still remain 1-day. Still remain 1-day. Okay? Clear so far? Okay? Yeah, then I will also actually have my, yeah, by default it is like that. Very hard to show you, but by default I also have my pivot point there also. But yeah, I think I'm going to show you here. I think not for now. Okay, you'll be there. You'll be there. Do you mind share your elder force if you show over? Oh yeah. I think one day, lady, I need to add in also do a masterclass on the elder force index. So the elder force index, actually I talk about elder force index in the members area. Okay, at the webinar, the latest webinar over there. So those who actually attended the physical face-to-face also talk about the elder force index. Okay, so the elder force index, for elder force index to work, you need to have volume. So for example, I use maybe NASDAQ. Okay, NASDAQ over there. Okay, by default, okay, this is not my indicator. You can just search for elder force index, okay, with ATR channel, the one by depth trade. The one by depth trade is there. Okay, by default, it is good enough. Okay, so you can see that this is like acting like by default, it is just that the green dotted, the green circle, red circle, it means that based on the elder force index indicator, price has exceeded its 3 ATR. Okay, I mentioned about ATR already. So this is just another indicator to show you that price has exceeded ATR, is ATR. So more than 3 ATR, it will show a red dot. Well below the 3 ATR, it will show red dot. So this is acting like a overextension. So price has moved in a direction overextended really. So for example, over there, NASDAQ, after that there was a rebound. Okay, price reversed back up, and then there was a red dot over there, which means that price is short-term wise a little bit overextended. So it tells you that this might not be a good time to buy into NASDAQ. It doesn't mean that price will come down. It just tells you that it is a little bit overextended. You need to be careful, okay? If you're ready to go long, okay? Doesn't necessarily mean that you're going to go short, okay? Price can don't go down, but just maybe go sideways. It might still show over there. So for example, over there, like here, okay, there's also a red dot over there, which means that, overextended over here already. So, price have some pullback, okay? And then over there, you can see over there, after that, overextended, okay, there's a mini pullback, overextended over there, somewhere around here, that this overextension, then price just reverse. Basically, you can say that it's like overbought, oversold, okay, overextension. So over here, like this here, over here, okay, when there's a pullback in April, okay, there's a green dot over there, like overextension. Okay, Ken, Lady. All right, so I think 9:30 just nice. So this I think no more question. Okay, I think there will be a recording. So I will post this recording into the members area as well. All right, so I think with that, thank you so much for staying with me. The market just opened, so we shall see how the market do tonight. Okay, so with that, thank you so much, and I will see you guys again. All right, thank you and bye bye.